Hello traders, it's Samurai Trader here. Welcome to this training session. In this session I'm just going to be recapping or going back over a number of our standard trade setups, being the T2, the T10, and a relatively new one that I've been referring to called the T9. Now it really is quite often a T10, but the only difference is I want to see a paint bar. It's something that I've noticed it works really well for me visually, and because it's very closely related to the T10 I just call it the T9. So you call it whatever you like, but the T9 works for me, and as you'll see they quite often will plot or set up at exactly the same time. Before we get to the charts, understanding the risk, if you haven't read the risk disclaimer for some time, please do. And as we're about to go to full screen, you may wish to or look at the charts, I should say, you may wish to go to full screen bottom right hand corner. And let's start with a snapshot that was sent to me by a member just with a question about these T2 setups. Now we can see here a couple of things. First of all, the black line, which is our long-term stochastic, is not totally overbought or in this case oversold. You may notice it's up around the middle of a window. Not all setups will be textbook setups, and I believe most of the time close enough is good enough when it comes to trading for me. And here in this particular case, this little white line you can see here is the 50% level. Now for me to qualify a T2, what I'd like to see is both of the MACD to, so I should say, sorry, the stochastic, let me get this right, the stochastic come up above the 50% level. Now here this is the sort of pristine when it goes right up into the old overbought area. This basically touches the overbought. This has gone up just to the 50% level, and you can see here that the long-term stochastic is not oversold, which would be the ideal situation. Like this is sort of more the ideal setup, and this one's almost textbook as well. This one here you can see the long-term stochastic. However, I still mark that up as a T2 because close enough is really good enough most of the time. Now one thing you will notice here, that this T1 set up on the first candle, this T2 I should say. As I always say, traders, these recordings are always unedited, unscripted, and this one here you can see is on the third candle. This T2 is on the second candle. So if anything, this is a later entry than say this one or this one. So that's just something you need to consider, is has the move already moved, or are we a long way into the move? So I marked that up because to me it's sort of close enough. Now with that being said, if that had ticked up another 2 or 3 candles, we would have had a T1 plot. Now I always recommend you enter, particularly on these ones, at the close of a candle. So yes, it has moved, it's not pristine, but it's close enough. So hopefully all that makes sense, traders. So let's go to the charts and have a look at some setups on the charts. So what I wanted to point out here first of all was what I call the T9. Now the T9 is simply where I get the paint bar plot. You've got one here and here, and I'll explain the differences here. What I'm actually going to do is just remove the little yellow highlighter for a moment. So notice here we've had a T3 down here, nice gap away. So as a reminder, T3 is where price gaps away, and you can see on my anchor chart. So what we're looking at, by the way, is the NQ144 tick and the NQ377, 144 and 377. So this quite often, the T9 quite often turns into or is a T10. The difference being is for me to mark it up as a T9 now, I always have to have the white paint bar plot. Okay, so you can see prices come down. I've now got a higher low. I get the paint bar plot. To me, that is what I call a T9. It also, in this particular case, is a T10. So if you look at the rules of your T10, you've got your long-term stochastic rising. On that previous picture I just showed you a normal stochastic with both lines crossing over. This is a 2 smooth, which means you've only got one line, and what that represents is the 2 lines crossing over there. So this had the white paint bar, so this technically is a T10 as well. Okay, so hopefully this is making sense. So what I'm looking for is where price has been going down, as we've got it here. Then I get a setup whereby I've got a higher low in this case and the white paint bar plots, and for me I call that a T9. In this particular case, you can see here it's the long-term stochastic is basically horizontal. We don't have a sloping long-term, so this setup here is not a T10. But what we have had is the short-term stochastic come down and kick up. But with a T9, I'm not looking at any of the lower indicators. All I'm interested in is what are my indicators up here telling me. So we can see here we've been going down. I've now got a higher low, the paint bar plots, and I enter. In fact, if we move over here a little, I'm just going to move something on my screen here. Let's just go here, and I call this also. Price has been going up. Now I have a lower high. Okay, I now have the paint bar plot, and we had one here as well. That is, we had a low come down for a 34 bounce, sorry, a 200 bounce, until I've been up trading all night and a little weary. And now I've got the paint bar plotting up here, a higher low, and I scalp the market. In I go. So higher low, in I go. Lower high, in I go. Higher low, in I go. A market's fallen down. I've now got a higher low, in I go. Now if we have a look then at where I don't get the paint bar. Now in this particular case, I've got my long-term stochastic has gone up. We can see in the lower window, and we can see here I've had my short-term stochastic go up and kick over. Now let's just have a look at the formation of what's actually happened here. Now these can be a danger area because we're right at the 200, but we can see here we've come down and tested it, and the short terms come up. Price action has basically hovered around, and this is almost a T25 trade itself as well. So you've got a couple of candles have pulled up, you've bounced on the 34, you've closed under the 8 EMA, and away we go. And just why I'm talking about T25s, here is one here in a fast moving market. Remember, a T25 normally is a 2 to 5 candle pullback, but if I've had a 1 candle pullback in a strong market, I will still enter. And what you can actually do is put a limit order in if it's not moving too fast to sell 1 tick below that little low there, and in we go. But let's go and have a look at some more setups here. Here we've got a T9 again, and let me have a look at this here. So this one here is a T9 and a T10. Notice here the long-term stochastic has started to rise, the short-term has come down and kicked up. I then get, and technically I could enter on the close of a candle, because remembering this white paint bar would not plot until the third candle ticks above the high of the second. So in this particular case, if I had have taken this as a T10, I would have been in earlier than my T9. Looking over here, we can see here, this is a textbook T10 because we've been fully oversold. Here we haven't been up into the overbought area, fully overbought. You can see we're under the 80% level, and I roll over right there. So that is still sort of it's sort of a T10 still, not exact textbook. You can see we're in on the third candle, and there you actually also have a T25, 2 candle pullback, full down, and there's your T25. Now let's just scroll along and let's find some others. Now here we've got one right here that doesn't work out. Okay, and you can see here, well, right there we actually had a T10 right there. Notice how the long-term stochastic has come up, short-term's kick down, come up, and you would have been stopped on that particular trade. Likewise, this one here, is where I've got my, I'm just looking for my very first paint bar to plot where I've got a higher low. Now here this one fails, but generally speaking you'll find it's a fairly accurate and profitable trade to take. I really like these, by the way, the T9s especially. My favorites on CL, and they work really well on the ES. As with every market trader, just go back, because different markets have different what I call personalities. Just go and check them out just in case. So where's my next setup? Well, here I could almost say here is one here, but it's really just our standard trend continuation. But down here we've dropped down, we've had a higher low just here. Now by the way, it's yep, that's it there. So I've got an entry here, and remembering of course here this is a counter trend trade, so we're going against the trend. And where is our logical bounce point going to be? In this particular case it's the 89. We got there, we bounce around on the 89. Now my stop, by the way, I always like to have my stop 2 ticks, well not always, let me correct myself. Usually I like to see my stop 2 ticks below a low. However, another rule comes in. If you've got a really large candle, and say if you enter up here and your stop is too large, like on the NQ, I like to ideally have a stop around 12 ticks. That's sort of the ideal. So let's just see this, just check this one out. By the way, remember the white paint bar did not plot until this ticked up there, so that's a high of 0850. That's a low of, okay, that's 12 ticks right there. Add my 2 ticks below, that is a 14 tick stop down below here. Now remembering traders, we want to go for a minimum of 1-to-1 risk reward, particularly on counter trends. Ideally want it to go even higher. So if you had have tucked your stop in down here, you would have probably come out, let's have a look here. Let me just see, that's again, that's a high of 0850. Just take the high of that candle, 0850. okay, that's 4 ticks, that's 16 ticks between there and there. All right, now this is quite choppy in this particular zone. We're at 9:56 in the morning. So coming along here, I'm just going to try to find some other setups here for you. I mentioned here, did I mention this is also a T10? Okay, you can see here you've come down and kicked back up again. Let me just find, so once again we're looking at the NQ, and this is sort of getting a fair way away at this stage. So when I say that, okay, we can see here it is still a T9. Once again, go back, mark up 100, 200 of these, and you'll start to get the overall picture. Here's one here, and you can see it's a very mechanical approach to trading. It's very simply, we've gone up, this is my first, the market's fallen, gone up, rolled back over, and this you can see here is not a T10, it's a clear T9, just where markets come down, rolled back over. So this is a lower high, it's lower than here, and that is a T9. Let me just find another one. We've come up here. Look, this is all very sloppy, and this is may as well just mention this. When you start to see the EMAs going horizontal, this is your danger zone. You want to be really careful in these sorts of areas. You want to wait for a breakout. One of the ways of waiting for a breakout is to wait until you get a T3 setup, which is what's happened way down here. You can see price is separated. Now I'm looking for re-entries after that happens. Now, as I mentioned, this is Friday's action. Let's just go back. Let me just go back to another area. Let's just look here. Okay, so this is 8:20 in the morning. Okay, there is both a T9. Oops, your T10 did not appear to this next candle, which is at the same time as your, there it is there. So here you can see my white paint bar plotted. That tells me I've got a higher low. That gives me an entry signal to enter there, and as you can see it's almost a T10 at the same time. So you can see how they work hand in hand. The only difference is, and this is what I look at, this is what I call a big picture T9. Okay, notice how then prices come down, pull back, and There's my entry. Once again, every market, go and do your stats on them. Now let's just have a look at this one here. We've got no white paint bar, but if we look down at our long-term stochastic, has been oversold, it's starting to rise, market's risen, you've had a pullback, you've had some profit taking, short terms come down, kicked up, and away we go. So let's now just quick recap on T2 trades. So please remember, traders, that the further you get away, or your price action is away from your main EMA, such as your 21, your 34, the more likely you are to have a retracement or a pullback. So if we look at this here, long-term stochastics come down, we're now in the oversold area, and short terms come up and rolled over. Remember, this is a too smooth, so we're just looking at one line. Normally you'd be looking at both lines on your stochastic crossing, which should be there, okay, and your entry is on the close of this candle, which coincides coincidentally with a T9 setup. Now this next candle, or next, let me say candle, the next T2 setup we have is right here. So we can see here we're still oversold, the short terms come up, rolled over, my entry is on the close of that candle, and away we go. And we have another one which also happens to be on the next candle, a T1 would have plotted. So we can see here we've kicked up a little bit. Look, in an active market you'll see them moving up and down anyway, but the short-term stochastics come up, rolled over. This is also a 34B, as this one is. So at times, remembering, you're going to get multiple type signals, and we can see here stochastic is rolled over, and in we go on the close of that candle. Now if you don't have the paint bar, what do you do? So if you don't have, and there are some software platforms where you don't have the white paint bar plotting, what you're looking for, traders, is a pullback of 2 to 5 candles. So price goes up, pulls back, and remember the rule of 2. Ideally you want to see 2 candles closing in the direction of the trade. So price has taken off, it's come down, you've pulled down under or below the 8 EMA, the trigger line, you close back above it, there is your entry. So let's just take this over here. So if we were looking for, and you could almost you could take this, because also over here, if you look at my 89 on my anchor chart here, we can see what's happening over here. So price goes up, you have a pullback, and I'm waiting for a close above the 8, which is right there, and my stop is put in 2 ticks below there, and away the market goes. Let me just show you another one. Now this is another T9, and this is let me just have a look. This is what I call a standalone. It's a T9 in its own right. We can see here we're still overbought with our long-term stochastic. We've gone up, prices come down, rolled over. On the tick down tick past this second candle, this white paint bar appears. So that is a lower high, so I would short. Now if you were trading the markets without the white paint bar, markets come down, ticked up a couple of candles, rolled back over under the 8, and in you go. Now back on this one, sorry traders, my daughter just called out, and let's see, so sorry that I just had to break the recording, so I can't exactly remember where I was. Okay, so market's fallen, pull back, and it's continued. Now let's just have a look up here. Here we've got another one. Okay, so we've had a high, markets come down, we've come up and rolled over, and there's our entry right there. Now if we look down here, you've got really, you could have quite easily considered this entering as a T10, but notice it's really a higher high, so price hasn't started to come down yet. Moving along here, here's what I call it. Now when I call it a big picture trade, what I mean is it's over a larger area, so from there to there. So notice this is a higher low, okay, and in I go. And for me, it's just a very visual representation of the market. It's gone up, pulled down, pulled up. You've had 2 full candles, so effectively 2 closes in the direction of my new trend. We've got another one right here. We can see we've had a high, price has come down, gone up, ticked up, and rolled over. So that white paint bar would not have appeared until that low was taken out about here. Now if we look over here a couple of candles later, you actually had your not that one, remove that for you. Here it is right here. You've got your T10. So your short-term, your long-term stochastic has started to come down. Your short-term's gone up above and it's rolled over. Now by the way, it doesn't have to cut through. Sometimes you'll have it where it comes up and just rolls over, so it doesn't always have to have that formation. Over here you've got a T10 right there. Now just a word of warning, when you get them and your price action is really moving away, you want to be more cautious. Okay, you can see here that price action's really moving away, but it's accelerated. I always get a little nervous with those when that happens, because the further away from your major EMAs you are, unless it's a strong move, the greater of a chance for a pullback. We'll just find one more. All of this is very, very sloppy. These are all, now technically here is one here, all right, and that would have been a fail. Okay, that one would have failed on you, and the reason it would have failed is you entered here basically a 200 EMA bounce, all right, and of course it only went up a few ticks, then it fell away. Your next one, we've got one right here in the direction of a trend. Now don't forget, traders, this is where you want to be looking at what is happening price wise on my anchor chart. So on my 377 on my right, we can see here we've got basically a 200 EMA bounce right there. This one here is an 89. This decent pullback I've had here is an 89 bounce. It's a 200 bounce on my entry chart, and it's an 89B on my anchor. And just have a quick look at this one here. Here is another one just there. So traders, hopefully this has just clarified a few things. So remember, with your long-term stochastic, it's never going to be perfect, and after a period of time, start reading your price action, what's happening in the top part of your charts, because really all the information you need is given to you by your anchor chart, the direction, and the EMAs on your entry chart. Everything you need is there. Your pullbacks, that's a T25. Of course, you had a decent pullback, a close below the trigger line, a close below the 8 EMA, and away you go. Up, a pullback, close above the 8, in you go. Price has bounced off for 200, or you've had an entry there in its own right as a 200B, but it's come up, it's pulled back down, close, and in you go. And that's not even a perfect one, because you didn't get a close below the 8 EMA, but trading, as I mentioned, is rarely perfect.